Welcome back to the CryptoBot channel, everyone. My name is Josh, and right now, Bitcoin dominance is getting a rejection from significant resistance, while Dogecoin just pumped over 30% immediately after Elon Musk changed the official Twitter logo to the Doge meme, which I'll talk about later in the video, so definitely watch to the end. First of all, starting off on the 3-day Bitcoin chart, and right now the Bitcoin price is still clearly running into significant resistance and also forming a large bearish divergence on the 3-day time frame, which has not yet been confirmed. So obviously over the last 1 day, not much has really changed here on the 3-day chart, and something similar can be said about the daily Bitcoin chart, because once again we are still running into this same area of resistance, and as I explained in my last video, we do have a bearish divergence currently active on the daily time frame, which basically means we shouldn't be expecting a lot of bullish momentum in the imminent short term relative to the daily time frame, which usually means around 1 to 2 weeks or so on average for these bearish divergences to play out. And now it is important to mention that just because we have a bearish divergence, this does not guarantee the Bitcoin price is about to crash, but instead it just means reduced bullish momentum, which can either mean a pullback or even just some choppy sideways price action, basically a consolidation before potentially breaking out above this resistance later on, considering we are still currently within a larger bullish trend here on the daily time frame. We're just simply taking a pause from the larger trend as of right now. And now if you're zooming into the shorter term, this pause can be seen here in a choppy sideways price range here on the 4-hour Bitcoin chart. And so obviously as of right now, we still have this area of support in the short term sitting in between 26.5k to around 26.9k, and also this area of resistance, which is sitting at around 28.6k to around 28.9k approximately. So at least in the imminent short term, the price of Bitcoin is looking relatively neutral, not overly bullish or overly bearish just in the short term. But once again, this short-term pause or consolidation here is occurring within a larger bullish trend, at least as of right now. But anyway, taking a look at the Bitcoin dominance chart on the weekly time frame, we are still running into this significant area of resistance, sitting in between 47.5% to 48.5%. And once again, as I've explained quite a lot recently on the channel, over the last 2 years, we've seen quite a lot of rejections from this area of resistance, and each of these rejections have resulted in a large pullback in the Bitcoin dominance, which basically means an altcoin season, because when the Bitcoin dominance goes to the downside, that means Bitcoin's market share is going to the downside, which means altcoins are gaining in market share. Altcoins are outperforming Bitcoin if the Bitcoin dominance goes to the downside. So once again, if history were to simply repeat and we were to see another rejection from this area of resistance, then that would basically cause an altcoin season, leading altcoins to outperform Bitcoin. And already as of right now, the current weekly candle is sitting in the red, which means we could see a possible rejection confirm here after this weekly candle close. But obviously we still have around 5 to 6 days to go until the weekly candle closes. So at least for now, we still need to wait for some more confirmation whether we eventually see a breakout or a rejection here. Either way, we have not confirmed either scenario. We are still in the test phase, simply testing this resistance as of right now. But anyway, now getting into the Ethereum part of this video. This is on the daily ETH to US dollar chart, and right now the price of ETH is still fighting against this area of resistance in between 1770 to around 1820 approximately. And on top of that, we also have a bearish divergence here on the daily time frame, because recently we've seen higher highs in the price action in the daily candle closes while forming lower highs in the daily Ethereum RSI. And this bearish divergence only invalidates if we either see new highs in the price action, because in that case we would need to reconfirm the bearish divergence, or more importantly, if we actually see higher highs in the RSI, because that would essentially cancel the bearish divergence altogether, because obviously higher highs in the RSI and higher highs in the price action is no bearish divergence. So at least as of right now, this is something to pay attention to, pointing towards reduced bullish momentum in the somewhat shorter term here on the daily time frame. And so if this simply continues to play out, we're likely going to see a little bit more choppy sideways price action as we have already been seeing over the last few days. And as for other levels of support and resistance on the daily time frame, we still have this area of support in between 1650 to 1.7k and this area of resistance at around $2,000 in case we see a major confirmed breakout above 1820, which we haven't seen as of right now. And now if you're taking a look at the shorter term, this is on the 4-hour ETH to US dollar chart, and right now as of recording this video, the price of ETH is still chopping around sideways, consolidating sideways here in this sideways price range in between this support, which is sitting at around 1710 to 1730, and this resistance, which is sitting at around 1830 to 1850. So at least for now, at the time of recording this video, the price of ETH is looking very neutral in the imminent short term, not overly bullish or overly bearish, just in the short term once again, which is acting as a pause from the larger bullish trend here on the daily time frame. And now for some other crypto news today, Elon Musk just officially changed the Twitter logo to the Doge meme. That is right. If you go on the Twitter website right now, instead of seeing the normal blue bird logo, you are instead greeted with the Doge meme. And as soon as this change was made, we saw a massive pump in Dogecoin's price. In fact, from the bottom of this move to the top, this move happened over around 1.5 to 2 hours, and we saw a 37% pump. That is right, a 37% pump in less than 2 hours from Elon Musk changing the Twitter logo to the Doge meme. And in fact, this pump in Dogecoin's price resulted in Dogecoin's market cap rising around $4 billion in less than 2 hours from Elon Musk changing a bird to a dog. Now, obviously, in the traditional financial world, this would seem pretty crazy, but in the crypto world, this is not really out of the ordinary. We have seen this type of thing occur in the past. And in fact, if you zoom out to the weekly time frame on the Dogecoin chart, we can see that right now, Dogecoin is actually breaking out above significant downwards resistance. And of course, this line of resistance stems all the way from Dogecoin's all-time high, which was after a massive pump, partly also caused by Elon Musk during early 2021. And obviously, since the all-time high in Dogecoin's price, we saw Dogecoin crash by over 90% to the downsides. And already since Dogecoin's bottom right around here, we have seen a decent recovery and now a breakout above this resistance. And now you might be wondering, well, is this the time to buy Dogecoin now that we're breaking out? And well, first of all, we need to actually confirm this breakout with at least a weekly candle close, considering we're on the weekly time frame. But more importantly, it is worth considering the fact that right now, Dogecoin has just completed a 30% pump, and usually buying anything after it has just had a 30% pump is usually not really a good idea. It does come with extra risk, especially if you're expecting short-term profits. Buying anything after it has just pumped 30% in expectation for short-term profits is obviously not really a good idea. Even if Bitcoin pumped 30% in a single day, buying it in expectation of some short-term profits, then that would likely not end too well. Now, obviously, if you held for the long term, that's a different story. Anything can happen over the next few years, for example. But if you're buying this after a 30% pump has already happened in expectation of some short-term profits, if you're thinking, for example, the price might go a little bit further to the upside, which of course it could, but it is still very risky buying something all the way up here in expectation of a little bit more profit, because obviously up here, the potential profit is not necessarily as big as the potential loss after we have already had a significant move to the upside. Because of course, the idea around trading is buying low, selling high, not the other way around. Now, of course, that is not financial advice. You can do whatever you want to do with your own money, but it is just important to consider the risks after a massive move has already taken place. But either way, whether you think the price will continue further to the upside, dump up from here or simply chop around sideways. Either way, you can make money in crypto by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is either pumping or crashing, and the video in the bottom left shows you how to make money if the price is just chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.